What's up, team? All right, so here's the things. I'm wearing an orange hoodie because it's cold in San Diego, which means it's below 70. Anyway, we have a crucial moment here in mortgage bonds and for mortgage rates and for what's going to happen, what the next step is going to be in the real estate market. And this particular situation that we're in right now, I'll show you the charts here in a second. You can see there's a moment of indecision. There's a little bit of uncertainty. I just don't know who would want to buy a bond right now. You know, you have the stock market going up big every day. You have crypto going up big every day. Everything's up. And, you know, who would want to buy a bond that pays a measly 1.75% or 1.5% per year? Who would want to do that? I can't believe there's anyone buying bonds. But thankfully we have the Federal Reserve in there, and there are some other countries. There's some people who are buying bonds, and actually bond auctions haven't gone okay. This could be much worse. It could be much, much worse than this. So we're going to take a look at it. I'm going to show you a couple things. We're going to check the correlations, see if they're still there. At this particular moment of indecision, where we have we actually have a bearish flag forming, which is not a good sign. I'm just looking at some of the things I'm experiencing on the ground level. I help people with home loans, obviously, specialize in the VA home loan benefit, NMLS 155010. And so I talk to buyers on a daily basis. Today happened to be a day of the week where I contact everyone who's been pre-approved. See what's going on. You know, how are we doing? How are you feeling about the market? What's your take on what's happening? What level is your frustration at? Have you given up? Do you need a nudge? Do you need numbers? This is what today is about for me. So making those calls and those follow-ups today, followed up with about 50 or so people who've been pre-approved. And about 10% of them said, we're done. Price is too high. Rates went up a little bit. We're out. We're just going to sit it out. We're going to sign a lease, whatever. That's not enough to take away the demand that we have at this point in time. The demand that we have is so off the charts that even with 10% of buyers exiting stage left, you're still going to see multiple offers and you're still going to see prices go higher. That's what's crazy. The demand is so high. And similar to Bitcoin, what we have here in San Diego is a very limited and difficult to grow inventory, the supply. It's just not a way to really build much more here. Okay. I say similar to Bitcoin because there's a fixed amount of Bitcoins. And that formula is working itself out right now. So let's take a look here. Let me pull this graphic off. One-man band. We'll go to Barry Habib's website here. This is mbshighway.com. A lot of people ask me about this site. Hey, where are you looking at those mortgage bonds? I want to check that out. mbshighway.com. You have to sign up for it. It's not free, but it's cheap. It's not expensive. So you can figure it out and you can see what's going on. And let's draw for you what's going on here. Remember, oh no. Are we still live? I don't know. I think we are. Okay. That's the first time I've ever seen that error. That was weird. So here's what we're going to do. We're going to draw. Now we've looked at the long-term downtrend, right? For mortgage rates. These are mortgage bonds. And remember, prices going lower on mortgage bonds means rates are going higher. So we really want these prices to be going higher. As you can see, they are trending lower. And one of the things I'm going to do here to make it a little bit easier to see is I'm going to take some of these moving averages off. All right, so we can just kind of look more at the Fibonacci's, the support and resistance lines, and then our trend line here, which is the green. So that's the macro trend. So if you consider that, along with some of the moving averages, which I removed, there's a lot of headwinds here in the near future for this. And they keep stacking up. They keep piling up, even though we're not really going anywhere. In the intermediate term, the greater concern is this bearish flag that's forming here. And I didn't watch Barry's video this morning, I'll admit. I'm sure he mentioned this because it's so obvious. And this happens, when you have basically this. It looks like kind of like a flag, right? When the long part, when the pole is going up and the flag is on the downside, then it's considered a bearish flag. Now, that's technical analysis. Who knows what will happen? But the bottom line is that the market's at a point of decision here. And the last few days, we really haven't gone anywhere. You can see the last few days have pretty much just been sideways here. Pretty much just sideways. That's why you really haven't heard from me this week. There isn't much going on. You know, we haven't seen anything really happen. We're pretty much just the same. Nothing's changed. We did have a rollover in the middle of the week, but not much has changed. However, we're at a crucial moment because maybe we could have one more day where there's a little candle guy in here, another one of these guys or something. maybe tomorrow will be that day and it'll be very light and we'll still be inside the flag, and then we'll see what happens on Monday. That or tomorrow is the day where we figure out which way this thing is headed. We've been warned by Barry, who runs the site, that we're probably going to see higher rates in the short run, and to just expect that. If you have refinances, you should lock them. If there are people who can wait and see what happens 6-8 weeks from now, then maybe that's what's best. But basically right now, it's a if you like it, lock it kind of situation. If you have buyers that are telling you, I'm going to wait till rates go lower, they may not. This could be it. There's so much pressure on these bonds, and I think there's way more inflation than what we're being told by the government. And that's just my opinion. I don't know that for a fact, but it's my opinion that there is far more inflation going on than what is being reported. I mean, just look at everything. It's absolutely insane. My buddy's buying a rental property in Iowa. Appraisals are taking forever right now, by the way. This guy, though, in Iowa, he's buying a $150,000 4-unit in Iowa, had to bribe an appraiser to get him to do an appraisal in less than a month. Had to pay him $1,200. You tell me what in the heck is going on if that's the state of real estate in the middle of nowhere, Iowa. And here we are in San Diego. So there is just a tremendous amount of money pouring in from every direction. And that is sort of how inflation starts, because people are willing to pay more for stuff. A lot of people think that inflation is when people start charging more for stuff. And that's not how markets work. Inflation comes in when people are actually willing to pay more for stuff because of demand. You've heard the stories of, or the whatever you want to call it, the cliches of, well, you're going to need a wheelbarrow full of dollars to buy a loaf of bread. That's not how it works. If you put a price tag on something that's too high, no one will buy it. It's that simple. That's how the market works. But when you have 50 people who want to buy the same house, one of those 50 people is going to be desperate enough, have the means enough, not care, whatever, to pay $100,000 over ask, to remove all their contingencies. That's what inflation looks like. And it's not just for housing. It could be for other things too. So inflation is not something that's forced on an economy. It's something that sprouts up from certain circumstances. And right now, everybody's pretty fat and happy, right? Let's take a look. Stock market. I believe the S&P hit a new all-time high today. I think it was intraday, though. I don't know if it closed at an all-time high. Stock futures rise. So it was a record today for the S&P. Record. How many records have we hit during this pandemic? Pretty wild, isn't it? Record after record after record. Markets up every day, every day, every day. Dow Jones at 32,485. S&P is almost at 4,000. So, the fact that the stock market just won't stop is not helping us. Because look at this. You made 1% in the S&P today. You made 2.5% in the NASDAQ today. And then you want me to go buy a bond that's going to pay me 1 point something percent for the year? You see what I mean? So bonds are just in a tough spot. They're just in a tough spot. We need the stock market to slow down and knock it off for just a little while, and it's like tongue in cheek. You say these things and it's like, well, gosh, the stock market being up I'm crushing, the 401k is amazing. I don't want to root against it. At the same time, we do need lower mortgage rates. It's important for this real estate market because right now buyers are exiting. There's still plenty of buyers. I'm sorry to say it. Buyers who aren't exiting, you're just going to have to pay more because there's so much demand. And we have, I don't even know if you could call it a crisis. We have an inventory tragedy taking place right now in San Diego. Deals are happening now. It's become more and more important to know people. San Diego is going to become the way San Francisco was a decade ago. You're going to need to know people to be able to buy a piece of real estate. You're going to need to know a listing agent. You're going to be able to, you're going to have to work with an agent who is a listing agent and buy one of their listings. You're going to have inside scoop. It's already been like that for everyone who's on the ground level who knows that's already what's happening. I look and see what I have in escrow right now. I look at one of the deals that just funded. Thank you, Corey, by the way. I don't think I'd get that deal if she doesn't know me. So, and that family and the pictures are so cute. I'm gonna post those here in a little bit. So it's becoming a who you know game. So this whole rate thing may not play a factor, but if we see bonds head lower, especially if you actually get and start closing below 100, we'll stop looking at this 2% coupon and we'll probably start looking at 2.5. And you'll keep seeing that trend go until we get to a point where rates start to make sense again. Let's see, the 10-year is at 1.53. Okay. So 1.5% on the 10-year treasury. So remember, this was down to like 0.3 when rates are at the lowest. So 10 years up over 1% since the lows, which makes sense why mortgage rates are up about that same amount. But the people who are losing the most are people with lower credit scores, though. Higher credit scores, rates are still higher, but not as much as people on the lower credit side. Okay, so let's take a look at this. So we looked at the Dow Jones, S&P, NASDAQ. We saw that. Okay, here's the deal. Everything's going up. It's putting pressure on bonds. Bonds are barely moving. And it looks like they want to go lower. It looks like rates are going to go higher. Don't shoot the messenger. It's just what it looks like. I could be wrong. I hope I'm wrong. Oil was down a little bit today. Not a whole lot happening there either. And but it was still up to 65, almost $66 a barrel, which is, $3 or $4 more. Actually, no, yeah, see, the oil clock restarts. It's kind of a weird thing to try to keep track of. It actually was up over 2% today. So we had that working against us. And it's up $3 or $4 since the last time I did a video. So, that's not stopping. And we're going to see, I actually got an interview request because of Smarter San Diego, the show, the YouTube channel. I do get requests from different PR agencies. I have a guy and I kind of want to interview him, but I just don't have time. It's hard for me to even do this. And there's a guy who owns a trucking company who wants to get the word out about how this rising gas price is going to make everything cost more money. And I kind of want to interview him so that you don't have to take my word for it. But it is going to sort of force things to cost more money. They'll have to, certain things. And these are going to be things that are mostly things that people have to buy or things that people are going to buy regardless of what they cost. Basic things that get delivered. Everything gets delivered in a truck, pretty much. So whatever it is that you buy, doesn't matter what it is. If you get it on Amazon or at the grocery store or Walmart or Target, it comes there on a truck and usually from somewhere far away. So that cost is going to go up and it'll bleed into everything. It doesn't mean that stuff's going to double. It just means that things are going to go up. And ultimately that's going to suck money away from other things like investments or the stock market or whatever, or buying homes and so forth. That's kind of what I think his thesis was. And I did talk to him, but I don't know if I'll do the interview or not. But it was very, very interesting. And so that's the reason why when I said oil is a tax on everything, that's what I meant. Because it's going to make the cost to get stuff from A to B more. And that's going to essentially make everything cost more money. People aren't driving as much as they used to. I'm certainly not driving as much as I used to. And so I don't think it's going to have as big of an impact as it would have pre-corona, let's say, but it is going to have an impact. So we have those things. We have inflationary looking information everywhere. Oil going much higher. The United States stock market going much higher. Look at the Russell. We made 2.3% in the Russell today in one day. Who wants to buy a bond? I mean, it makes total sense why we're struggling with this. So to recap, we'll pull this back up. We have a bearish flag here. If Barry didn't talk about this today, he will tomorrow, for sure. Maybe one more day of indecision. This particular day that we had today is one of those days where you can see that, okay, well, clearly this was just a push day. I mean, we lost 2 basis points technically, but ultimately closed higher. So it is green. I did wear my green shirt. I've been wearing every single time I get the chance for everyone who's as superstitious as I am. I'm hoping for this to bounce higher and to just give us like a really nice punch up here, because this thing could get all the way to 102. There's resistance in there, but it could get there before it really hits that major trend line and runs into trouble. And that would be huge. That would give a nice little piece of good news for us to share in the mortgage world. That would give us a really good piece of good news. And that was my target. I'm feeling much less optimistic about that happening just because of all the factors that are going on. And this kind of candle does not inspire very much confidence. This is a very weak candle. This one right here. That's today, by the way. I can't draw an arrow with this very well. That candle right there is weak sauce. Not good. Makes it look like it's going to go lower tomorrow. Hope I'm wrong. All right. That's the update for today. If you or anyone you know needs help with the VA home loan benefit, has questions about refinancing or purchasing a home with the VA home loan benefit, that is my specialty, and I would love to help them navigate those waters. A buddy of mine contacted me today, I've known for a long time, wants to do a cash out, wants to buy some investment properties in another state, has like a mid 3% rate. He can still get high 2s on his VA, 100% cash out, buy some investment properties out of state. Not a bad idea. Not a bad idea. Another buddy of mine reached out today, unfortunately getting divorced, needs to pay the ex off, do it via cash out, and lowering his rate. So there's still opportunities to utilize the VA home loan benefit to help meet your financial goals. I'm here to help you with that. You know what, Justin, I didn't see your comment until just now. And what's weird is I'm not able to bring it up, which is so weird. I don't know why it's not letting me do that. So Justin, who is a very smart guy, I don't know, super weird. I need to check my settings. He says, oil going to $100 soon. Buy it now, then short it. Oil, very well. I mean, my target is 100, but it'll probably go higher. I don't know when you short it. That's the hard part. When do you short it? I don't know, but it's definitely worth buying. You buy the USO if you agree with Justin. All right, guys, that's it for today. Share this video. Let's help make your friends smarter than everyone else. And I'm here if you need me. I'll talk to you soon.